Government bonds tend to be less riskier than corporate bonds. Why? Because we don't expect the government to go bankrupt and default on its bond. But of course, it happens. Some governments have defaulted on their bonds. And unlike corporate bonds, where it's issued by the company can go bankrupt and then it can default on its bonds. And then next to that, so we have the money markets. Let's say you have bonds. Let's say you have mutual funds. And then let's put real estate next to that.
Yeah.
So the real estate the risk is higher than the bonds.
Yeah.
The risk is higher than the money market. So we expect the return that you must get from real estate should be higher than the returns you should have generated if you were to invest in bonds, because you're taking more risk.
Okay.
And then next to it is stocks. So stocks, shares are higher, the risk are higher than real estate.
Yeah.
The risk are higher than the bonds, and the risk are higher than the money market. So you expect the shares to give you more return than this other stuff. And then the end of the spectrum is what we call the alternatives now. So the alternatives, that's why they're called alternatives. First of all, they're not traditional.
Yeah.
And then their risk could be insane. They could be very volatile. And then we expect to get more return. That's why if you were to line up all these types of investments and you plot them on your return graph, you'd see these will stay at the end of your graph. So alternatives could, as I said earlier, could mean Bitcoin, crypto in general, and then could mean commodities in its generality. And of course, I know people are trading currencies and that kind of stuff. So that is an alternative. So that's how you would plot the risk and return balance across all these different types of investments.